So one of the questions we get all the time is what type of title insurance policies are there and what do they cover? Okay, so in a standard real estate transaction, there is traditionally two policies. The first one in California is called the owner's policy. Now this policy is traditionally paid for by the seller because it's one person saying, look, I have rectified all items that are here on this property, and when I shake your hand and close this deal, that all things will have been resolved. So that is number one, first and foremost. In most cases, it's about 2/3 of the total title insurance policy cost. And the second one is going to be the lender's policy. Now, the lender's policy is something that protects something completely different. It's protecting the lender's interest in your property because the bank at that point is an investor. They're lending you money with an expected rate of return. Now, what they want is some assurances that all things have been rectified for their lien position on property. So should the homeowner decide to default or not make a payment, that they can recapture their investment. So on the lender's policy, what we're seeing is that that is based upon the loan amount and is adjusted accordingly. If you have a second or a HELOC, there's some piggyback stuff that does go in there. And here is the other big part of it. If you don't get a loan and you're one of those paying cash, you don't need to buy a lender's policy at that point. So that is the two different types, the owner's and the lender's policy. And want to make sure that I clarify what those two are. And once again, here in California, seller typically pays for the owner's policy, buyer pays for the lender's policy, and that is what it is. If you have any questions on this, please feel free to hit me or my team up, and whether you sell, buy, or refi, specify Team Title Guy. See you soon.